Hey guys, welcome back to Real Estate Informed, the channel that keeps you up to date on all things real estate. My name is Kevin, and today I want to talk about mortgage forbearance and how it can have an effect on your refinancing or pulling out a HELOC on your home. So I actually got this question on a Facebook group, and I thought it was very interesting to point out. So basically, it was a client that had an issue with, he had two properties, and one property was in mortgage forbearance, and the other property he wanted to refinance. And he was having trouble refinancing because one of his properties, not the property that he wanted to, not the property that was in forbearance, another property he was trying to refinance and pull money out. He couldn't do that because the bank said that he's in forbearance, even though it wasn't on that property, but it was on a separate property that he owned. So what can we learn from this? I think the main thing that we can learn from this is that mortgage forbearance is no joke. If you do mortgage forbearance, I understand that there's some people taking advantage of the system. If you're a real estate investor, a real estate agent, just somebody who is flipping houses, and you're just taking advantage of the mortgage forbearance when you possibly could pay your mortgage, it's not just a free handout. There are consequences to that, and the consequences are when you try to refinance or pull a HELOC or do something on a different property and you're in mortgage forbearance, you're going to have issues. Just think about it. If you're in mortgage forbearance on one property and you're trying to pull out money on a different property, and your response to that is, oh, it's two different properties, they have nothing to do with each other. In the bank's eyes, that's not the case. In the bank's eyes, it's you can't pay a mortgage on one. Why should we give you a loan on another? That's their thinking, which in my opinion is pretty logical. The second thing that I would say that you need to look out for is that banks tend to, lie. Yeah, banks lie to you. They'll say whatever it is to get you to do whatever they want you to do. And when it came to this mortgage forbearance, they had people sign a bunch of paperwork just so that they can get on their mortgage forbearance. But in the fine print of that paperwork, there's things in there that, the people were unaware that first 3 months and then on the fourth month, all of it's due. They weren't aware of stuff like that. And another thing is that they'll say stuff like, it doesn't affect your credit. It's true. It might. I've seen cases where some people have said that their credit score dropped 40 to 50 points, which is a lot. But the thing is, they don't negatively affect your credit score, but they're not. Banks are tricky. So basically what they do is they write a note. So on your credit report, there's all your mortgages. And on that mortgage, they'll write a note on that mortgage saying that you're in mortgage forbearance. Now, they won't say any late payments. They won't say you did a late payment, you didn't pay. No, so they're technically not affecting your credit. But in reality, when Credit Karma, Experian, Equifax, when all these people see that note on your account, they lower your credit score. So in actuality, it is affecting your credit score, but the banks are tricky. So that's the second thing to learn, is that banks lie to you. That's just what they do. You can never take a bank for what they say. They're trying to loan you money, especially if you're just a first-time home buyer, first-time investor. You can get caught up in that trap. So I wanted to make this video because I know that people are going through this right now. Is if you're an investor and you're thinking, hey, I have my own house and I could pull a HELOC out. But if you're in mortgage forbearance, you can't do that. Now, if you were maybe a smaller bank, maybe a hard money lender, maybe something else, but if you're talking Bank of America, US Bank, Chase Bank, they're just not going to do it. It's not going to happen. If you're in forbearance, refinancing or HELOC, or even getting a new loan, if you're currently in forbearance, is going to be an issue. So just be out on the lookout for that. I know that the market is tough. We're so upside down in the sense that we're in this pandemic, but here in the Seattle area where I live, we're having bidding wars. And it doesn't make sense to me when they're saying that 15 to 20% of homes are in forbearance. So who's bidding on these homes then? You know what I mean? If people's homes are in forbearance, who's bidding on these homes? I guess the rest of the 80% that aren't in forbearance. I just figured that, that would take a lot of buyers out of the market. That's just not the case. There's still a lot of buyers in the market. That's my video for today. If you guys liked it, please thumbs it up and subscribe. If you have a question, leave it in the comments below, and I'll see you in the next vid. And I'll see you guys on the next video. All right, thanks, guys.